Hi, welcome to this video, Dave, which is all about simple and effective Forex trading strategies for longer term profits. Now, in terms of simple trading strategies, there's many around that will work, okay? This one is just extremely simple. Not only is it simple, it doesn't take very long to implement the strategy either. It only takes 5 to 10 minutes a day. You don't have to watch price action or basically do much. It's focused on longer term trends. Now, in terms of the strategy, we're just going to illustrate it with a couple of pairs in a moment, which we looked at a few weeks ago. And just will show you the power of this strategy in terms of catching and holding long-term trends. Now, the strategy itself we're going to look at involves using a simple 4-point checklist. That's to do with the big fundamentals. If the checklist is clearly in favor of one currency over another, or 4 points are in favor of one currency, you can look to buy that currency over the other. Anyone can do that checklist. We'll go through it in a moment. And then when you actually execute the trade and manage the trade, it's done very simply, just with support and resistance in terms of your technical analysis. The beauty of this strategy is that the big long-term fundamentals will generate the really big trends. The checklist will help you find those big trends. And then the technicals will help you stay with them. Now, this strategy is very much focused on percentages, not pips. Now, in terms of what I mean by that, is a lot of traders talk about pips, okay, and they never equate them to percentages. You have to. Once you do equate them to percentages, you'll see why this strategy is such a good one, and also why it's going to keep you disciplined and focused as well. Now, what we're going to do is going to look at two trade setups, and the first one is going to be NZD CAD, and then we'll look at AUD CAD. Right, just have a quick look at NZD CAD, and just in terms of quote, I put it across the top here. Really like the quote, but I don't know who said it, so it's anonymous as I've put up here. But it was basically big fundamentals rule the long term, sentiment rules the short term. You can see that in any Forex pair. If Forex currency's got an advantage over another one, clearly in terms of the fundamentals, you get a big trend. Of course, you are going to get sentiment spikes in the short term when, for instance, in this case, prices have run too far to the downside. And you can see it's a nice big downtrend. You get a nice rally, sentiment rally, another sentiment rally, but the big trend is down. Now, the fundamentals will give you the idea. Okay, we'll go through the checklist in a moment. They give you the directional bias. So you know where the big fundamentals are going to impact, which currency they're going to benefit more than the other. There's no point in trying to catch a big trend technically. I've said this on numerous times, just by looking at price action. You don't know what is going to happen. Just from price action, you need to know what's going on behind the chart. Technicals, though, extremely good in terms of managing the trade once you've established that directional bias. Okay, now in terms of NZD CAD, AUD CAD, we were saying it in the last video, the fundamentals just so clearly cut in favour of the CAD on all 4 points of the checklist. Let's have a look at the interest rate outlook first of all. Well, we know that New Zealand is basically in a cutting cycle. They've cut rates, they're going to cut them again. Canada isn't. Canada is on hold. Better interest rate earnings, and they're not going to be cutting as quickly as New Zealand. Okay, so point one obviously favours the CAD. Domestic economy. Well, just look at the data. Canadian economy is doing pretty well. New Zealand is not. Okay, and then you've got to look at the trading partners. Okay, now trading partners, very important in terms of these two currencies. New Zealand is exposed to China. Well, we all know that China is slowing up. We can forget about all these trade tariffs, and if they're lifted, China might do okay. It won't. It wasn't doing well before the trade tariffs came, and it won't do well if they're lifted. I personally don't think they will do. So China's slowing up really quickly. American economy is pretty robust, so Canada benefits from that. Obviously, New Zealand gets hurt by obviously the China slow up. So points 1, 2, and 3 clearly in favour of the Canadian dollar. Then you have to look at geopolitical problems, if there are any, and the personality of the currency. Well, no real geopolitical problems in either country. Personality of the currency, well, all three are commodity currencies. Okay, so they're all sensitive to global risk. However, of the three, the Canadian dollar is seen as the safest. So point number 4 favours the Canadian dollar as well. Now, in terms of if you're trading big trends, yeah, forget about pips, work out basically the percentage change. Okay, and what I've done here is I've just put no leverage percentage change. We're just above 86 at the moment, but I've got a target, first target, as 75 on the downside. That's 12.79% with no leverage. Okay, now obviously that target's got to be reached, but the big fundamentals just so clearly in favour of the CAD, they don't look like they're turning around, so that is achievable. Just 2-to-1 leverage will give you 25% plus. Most Forex traders can't even make 30% in a year. This one trade could almost do 30%. If it got to second target, it's obviously longer term, 65. It's 24.52%. No leverage. So you can see once you start thinking in terms of percentages, you don't need to use much leverage and you focus on the longer term. With this type of strategy, you're not interested in what happens day to day or even week to week. You're focused, in terms of looking at the pair over a month or more, or many months. You're after the long-term gain. You're not going to have to make a lot of effort in terms of watching charts or anything with this type of strategy. Now, in terms of the way we've been playing it, we actually have done a few videos on this pair. When we came up here, we sold it at 91.80. She comes through the round number again. Just felt she was extended, and the smart money really short on the COT net traders positions, which is always a good sign for us. Then we want to manage with price action. And what we always look for is the 20-day moving average, the big trend to break. It breaks decisively on this red. A few pokes to try and get back through it. We don't think it will achieve it. Doesn't. And then we go down. Come back again to test the 20, get down. Keep going down. We've generally got our stop behind the 20-day moving average, and we get hit at 88.80. So basically, we will take 300 pips off that trade. But we know it's a big trend. Okay. Sorry, that line's a bit thick. Let me make it a bit thinner. There we go. We know it's a big trend, so we just want to get back in. That's exhaustion. We will come back in at 88.50. Then we break the 20 again, down. We get across the 20. It doesn't matter to us. We've got our stop. We always have our stop well back from the 20. I'll discuss a little bit more about this in a moment. So we get back above the 20, but just fall away again. Okay. Now, we would normally manage with round numbers. So, for example, we are at 86.62. Okay. So where do we want our stop? We want it one full round number back, or more than one full round number. So our stop at the moment is at 88.30. Okay. So what's going to happen is you're going to have to get back through that round number, then clear another round number to get our stop. Okay, so it's normally one round number in between, and we're back behind that round number for our stop. So 88.30, and we're obviously below the round number of 87. So that is the way we would normally manage big trends. And yeah, if we do get stopped out, we'll just key off a round number to come in short again. Okay, so we did get stopped out, but we came in 30 pips lower than our stop. It's not rocket science what we're doing here. Using round numbers is very, very effective, and the CAD looks pretty strong, pushing the NZD down. I wouldn't rule out the NZD rallying, but yeah, we'll just focus on the big levels, stay outside of the noise, and keep our eye on the big fundamentals. Those big fundamentals, yeah, we looked at them in the last video and even in the first video when we first did this trade. They're just not turning around anytime quickly. Sure, they might turn around at some point, but they're not yet. So far out of this trade, I think we made about 3 or 4%, and not a huge amount, but yeah, it's looking good. I think 12.79% more to come on the downside, and no leverage. Okay, got a little bit of leverage involved, then yeah, obviously the gains are better. You can kind of relax with this kind of trading strategy. You don't have to watch price action all the time. You're focusing on the bigger picture, the longer term, and the percentages that you can make, not over a few days or a week, but over a month or longer. I know plenty of traders would be hopping in and out of this pair, trading every twist and turn, and probably not getting anywhere. And that happens in a lot of Forex pairs. It's really designed for traders who want to make money, like I said, longer term, without too much stress. Yeah, and not really spend much time on their trading. Yeah, those 4 points are so clearly in favour of the CAD, and they are on the AUD CAD as well, which we'll look at just very quickly, and then we'll look at a couple of new pairs in relation, in relation to the Forex checklist. So let's go have a quick look at AUD CAD. Right, just on the AUD CAD, just going to use the chart from our member centre very quickly. We don't need to go through the fundamentals on this one or the checklist, because the checklist is identical to the one for NZD CAD. Both Australia and New Zealand have got the same problems. Slowing domestic economy, slowing China, and of course they're both an interest rate cutting cycle. So in terms of this pair, in terms of technicals, very simple the way we've been trading this one, just like NZD CAD. Got up here, price is stalled. Okay, we come off the 96 level, 95.70. Look for the 20-day to break. It does. Down we go. Stop behind the 20. We had it at 93.70. Just got clipped on stop, but a decent profit. And we moved on to 94 to test the round number. And this is one thing I'd stress with this strategy. You use decent stop loss protection. Basically, you don't stop too far away. Okay, but if you are clipped on stop like we were, you always look to come back in. And our entry is only 40 pips below our stop. We just, it runs on a little bit. We get some confirmation that the move is going to probably reverse. Just come in again. Yeah, like I say, get the break of the 20 down, 3 tests of the 20 there. We look like we're going to be going south, hopefully, next week with a nice close to their side on Friday. Now, in terms of, I've put the target of monthly support up there of 80, and you got 70 as another level down. The percentage gains are really almost similar, almost the same as NZD CAD. Okay, so big percentage gains can be made, and you might be thinking, well, why don't I just pick one of them? What I think is the best. I think doing the two together, they're both going down, but you kind of smooth your equity curve if you do both trade setups. Okay. So they both had a good run down, plenty more downside potential in our view. Now, in terms of that 4-point checklist, okay, I've illustrated it on these two pairs. Obviously, when we did the video a little while ago, this is the sort of setup that you look out for. That checklist just so clearly favours one currency over another. And you can see how it's performed. We haven't had to do much. It's just the big fundamentals are ruling. Basically, longer term, you get the odd sentiment spike like here. But sentiment spikes, they're not going to alter the big long-term trend. Anyway, the trend here, or the actual big fundamentals, still very firmly in favour of the CAD. I put my stop a little bit closer on this one at 92.50, just to lock in a minor profit if we're stopped out. But if we do leap up above our stop, we'll just probably sell back through 92. We're on a run on to 93. Now, in terms of that 4-point checklist, you can use it all the time, and you will get big trades to focus on. Did a dollar video yesterday, our outlook for the USD. There's plenty of pairs in that video that match the 4-point checklist. So it is effective. And a lot of people say, well, it's a little bit too simple. Well, it works. Nothing wrong with simplicity. And it does work longer term. You can see it just on these charts that I've done today. Also, when you look at our videos, generally, we're using the big fundamentals a lot of the time to catch big trends. Like, for example, recently our Japanese yen long positions, which are doing really nicely. I would strongly recommend do your own little checklist, manage very simply with your technicals, and you'll have a very simple, effective trading strategy that is very time efficient. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.